ideally what I would like to see in both gold and silver is some more volatility and even the possibility for a little bit of a spike lower than our recent pullback lows in the first half of April, because there are some very uncanny cycles coming into play just before mid-April that would be kind of the optimum for a secondary low to take hold.
The most significant results encountered for this Canadian mining region in over a decade. With a Canadian Mining Hall of Fame legend at the helm for more discoveries statistically than 1,000 geologists combined, this is the one hard asset stock to research right now. Learn more at crushthestreet.com/hardassets.
Hello everyone, and welcome into crushthestreet.com. I got a returning guest today. His name's Eric Hadik of Inside Track Trading. And for the last 2 years, Eric has been writing about his expectation that 2016 would be the golden year, and that any meaningful advance in gold and silver would wait until January 2016 to take hold. And we talked about that in our last interview. And he's been involved with the futures market since the early 1980s. And again, we have a lot to discuss today. Eric, thanks so much for joining me.
Well, thanks so much for having me back, Kenneth. It's my pleasure.
Absolutely, sir. You know, we were just talking pre-interview here. The Fed's non-decision to not raise interest rates when they said they would. I want to get your thoughts on this. We're obviously seeing gold respond pretty positively. Gold is up as we speak, 20 to 25 bucks. Let me see here. Is it about 25 bucks? So it's moving pretty good here. I want to get your thoughts initially on the latest news from Janet Yellen.
Well, I think it's, like we were saying, it's kind of more of the same, that they want to kind of have their cake and eat it too, still be able to talk about the potential for future rate hikes, but at the same time, actions speak louder than words, and there's even a little bit of hedging, at least the way some people are reading the comments. So really more of a non-event than anything, which then has me focusing on everything else going on in the market. So if anything, it's more removing one variable so that the markets can focus on others.
So what are you looking at elsewhere in the markets at the moment?
Well, you know, even when I talk about 2016 and expecting that to be the year when gold came back to life, it was the synergy of multiple analyses and different areas of the market that I was expecting to see dramatic shifts in 2016. And one of those has to do with just a general price inflation in commodities that I think we are going to see start to take hold in 2016. That late 2015, early 2016 was when a lot of longer-term cycles bottomed, and I've also written about an ongoing 40-year cycle of food crises that I think is going to come back into play in 2016, really through the end of the decade.
I actually do want to talk to you about the food crisis issue, and we didn't get to talk about that last time, but we are going to talk about that this time in this interview. But before we do, you know, you had mentioned that we would see another leg down, you know, another opportunity, if you will, for people to enter precious metals who might have felt like they missed the move here. And last week we actually saw gold move down by the tune of like $50 from the 1280 mark down. And we're actually seeing it up today, obviously after the Fed announcement. But is this what you are anticipating in terms of gold's leg down before another big move?
Yeah, and I should clarify, I think I spelled this out previously, but if I didn't, let me clarify. First of all, between gold and silver, there is one intermediate indicator in silver that has not yet confirmed to me the major bottom is intact. It is a lagging, it's a confirming indicator, so that doesn't mean that the bottom isn't intact, but it does mean that it hasn't triggered this confirming signal. And until that signal gets kicked in, which right now would take a weekly close above $16 in silver futures to trigger that signal, until that occurs, this indicator tells me there's still a chance of a retest of the lows. Now, what I think I kind of spelled out previously too, and I have in all my publications, is that I do look for gold-silver divergence at these lows, where gold will be the stronger one each time. So the pullbacks in gold are not near the extent as you see them in silver, and that gold, I thought the major bottom was in late 2015. That hasn't changed. So as you say, we saw a pretty good pullback into the end of February. In fact, silver really dropped more than 50% of its rally and dropped right to some really critical intermediate support at 1460. For anyone that even looks at charts in their peripheral vision, you could see that 1460 was resistance in December and January. Each time silver rallied, it stopped dead at 1460. And once it breaks through a level like that, it will often come back and test it, and it now becomes support. And as long as it holds that level, it's kind of reaffirming it and saying, okay, we've gone back, we've tested that key level, we found new buying there, and this is an affirmation of a slowly developing bull market. So silver went right back down to that 1460, dropped $1.40 from its peak, and held it reversed higher on a dime. So we have seen a good pullback. Did give an opportunity for those that haven't bought back in December to get on the bandwagon, but I still need to see this confirming indicator in silver.
Okay. And then to reiterate with what we're seeing in gold, what was the key support? I believe it was 1257, and we did see that, and gold fell back down to the 1230 level. And we're back up again. So, your thoughts on gold being in the bull market and what we were likely to see going forward?
Yeah, and that 1257, 1258 level was the first upside target in gold, that I needed to see gold exceed that level, and that's a separate indicator. I won't get into the details of it, but to me, that would confirm that a multi-year bottom was most likely intact. So gold did exceed that. Now, since doing that, it has kind of become more volatile, spiking above it a few times, never really following through. Ideally, what I would like to see in both gold and silver is some more volatility, and even the possibility for a little bit of a spike lower than our recent pullback lows in the first half of April, because there are some very uncanny cycles coming into play just before mid-April that would be kind of the optimum for a secondary low to take hold. And even if you look at gold over the last 2 years, it has turned on a 19-week basis with great precision. And it had lows in late 2013, 2014, and even the lows that you saw throughout 2015. The last 4 lows leading into the December 2015 low were at precise 19-week intervals, and another 19 weeks forward from the December 2015 low is the week of April 11th to the 15th. As I said, if we could pull back and whatever low is set in March if gold and silver are able to spike below that low in April and set a secondary bottom just before mid-April, that would be, for me, the best kind of wave structure and setup for a more sustained advance to follow that, to take hold in late April and then continue into some of the target levels that I have for later 2016.
So, Eric, what are some of the key resistance points for gold, for the next couple $100 going up the ladder here?
Well, really the primary level, and this is kind of a second confirmation point for me with gold, so it's a level that I expect to be tested and expect to be exceeded ultimately, is right around 1305 to 1310. But then beyond that, really the key level for the next couple months, I'd say, is right around 1350. And so they're the two primary points that I'm watching right now for gold, and that I expect to see ultimately exceeded, although levels like that, often the initial test does create a short-term peak and does create some profit-taking and pullback from there. With regard to silver, 1650 is 6 to 12 month resistance in my work, and I want to see that exceeded, at which point 1850 would become the primary upside target for the next 3 to 6 months. Once we get above that, then you're getting into some areas, some levels where I would expect to see acceleration higher.
What kind of acceleration do you anticipate happening? I mean, we saw a $25, I think it's $28 right now, move in gold. I mean, are you expecting gold to have $100 up days as we move into this bull market? And, silver, same thing, $2, $3 up days on, and on any given trading day. As this starts to really progress forward, we break through some of these key support levels, key resistance levels, and the bull market goes into full force?
I could certainly see that, but I wouldn't really expect too much of that in 2016. Maybe there will be an isolated incident like that, but usually if you're going into a serious, sustained bull market, it doesn't happen all at once, despite what many of the gold bugs have been yelling for the last 4 or 5 years. It takes time for a bottom to trace out, to get some initial rallies, some initial resistance levels broken, and then some pullbacks and some consolidation after that. So the type of moves that you're talking about, I would expect more in 2017 and 2018, and after certain other longer-term indicators. Some of them are actual moving averages, some of them act similar to moving averages, where it takes some time for them to roll over, start to move higher. Price then comes back and tests these indicators, and that's when you get more of a catapult type of reaction from there. So although I would expect to see moves like that, I don't, unless something changes over the next 3-4 months, I don't expect anything consistent like that in 2016.
And then as gold moves higher and then silver goes goes into its run, I know you said that they would diverge, but do you anticipate there being some sort of movement with silver as gold goes higher, that it will carry its little brother with it? And especially with that silver to gold ratio around 80 to 1, 75 to 1. I mean, if that ratio closes in, I mean, we could see silver be a huge mover as it goes forward. And considering the fact that for silver to get back to new highs, it's got to more than triple. I mean, for me at least, silver is the exciting speculative investment. And I wouldn't even call it speculative. I'm just calling it speculative because of the tremendous gains that, I anticipate being able to see, for it just to go back to where it was. and not even talking about it doing anything beyond that. So your thoughts?
Well, you have to look at both sides of that coin, and that is the fact that silver has lost 70% of its value in 4 years tells you that there's more to that situation than what you see in gold. Now, as you say, there's also that potential, and I do think that gold and silver will eventually rally in tandem, and that's more indicative of the second major advance in an overall bull market. And for any of your listeners that are familiar with Elliott wave, that's the 3 wave, which is called the most dynamic wave. You have an initial rally, which is the 1 wave. Then you have a bunch of consolidation and a pullback, the 2 wave, and then that second advance that's more sustained, more accelerated, and a much higher magnitude typically than the first rally. That's the one where kind of the rising tide lifts all boats, and whereas the divergence I was talking about for this year, and that's the thing I really need to clarify again, that's in the context of what I thought we would see as this bottom was playing out, some divergence where silver would retest lows when gold didn't. Possibly the XAU index might retest lows even when gold and silver didn't. And so you have this bottoming process that evolves over 6 to 12 month period, and then once that last market has finally washed out all the bearishness, then all of them are at liberty to rally together. And it's the inverse of that is what I've described in the stock market and stock indices, and it's almost like a roller coaster going over the peak of the hill, and each car in that roller coaster goes over the hill or goes over the peak at a different time. And it's not until that last car gets over the peak that then things begin to move down with real intensity. And so inversely, same thing with a bottoming market. It's not till that last market confirms that the bottom is intact that then you see a more sustained and believable rally. And yes, I would expect gold and silver to be doing it together. And that also fits with the idea that price inflation would start to come back. That, in the last couple of years, gold has been able to remain more resilient and see better rallies because most of that rallying has been on kind of safe haven or flight to quality moves into gold. When you were having the euro crisis and when you've had some of these quick stock market meltdowns and even the Chinese stock market drops of last year. When that happens, gold benefits proportionately more than silver because gold's getting all of the flight to quality buying, whereas silver gets some of that flight to quality, but then at the same time, these other factors are deflationary, and so the commodity side of silver then suffers. So it's kind of in this tug of war where silver's concerned, having both the flight to quality buying and the deflationary selling going at it together. I think that once we get through 2016 and enter that 2017-2018 period, then you're going to see the opportunity for both some price inflation and some safe haven, flight to quality buying to come into gold and silver, and that's when I think it's going to have the greatest opportunity.
Eric, let's transition over into the food crisis issue. Now, if I can step into the shoes of a mainstream pundit here, even in 2008, when we were dealing with massive swings in the stock market, we had banks going under, and everyone was screaming, crisis, collapse. People still were able to go to the store and buy food. What is going to make what we are going to deal with in the future any different than the previous crashes? And why will it be so bad that there are going to be food crisis problems?
Well, let me answer that in a couple ways. First of all is what you just described depends on your perspective. And you go back to that same time frame, or even a couple years after that, leading into 2011, 2012, and ask anyone in Mexico about buying corn, their number one staple, and there was, almost riots there because the price of corn had gone up so significantly, and they couldn't even afford a day's worth of corn in many areas. And so it's not necessarily economic crises that I'm expecting to impact food. This is more natural events, crop shortages, and the extent of that. We've had food crises every 40 years going back. I documented over 300 years back. You can look at a very consistent pattern of famines, droughts, shortages, and these were crises that in some parts of the world were killing 10 and 20 million people, in India, in China, in Russia, and other areas of the world were certainly suffering, but not suffering to the same extent. So a lot of that does have to do with perspective and context.
So,
and
go ahead. I was just going to jump in there and say, so what part of the world are you expecting for the food crisis to hit next? I live in California, and we are suffering from a historic drought right at the moment. We had a little more rain this year, but still the majority of the state is in a pretty significant drought. And if we go another few years without some rain, scientists are expecting it to be quite an issue here. Is this kind of what you are seeing as the next potential food crisis catalyst? And again, California is a major grower of food. There's a ton of food that gets grown here and supplies the country and many parts of the world. So I'm wondering if this is kind of what you have your eyes on at the moment.
I am certainly watching California, and here again, that 40-year cycle I talk about. When was the last devastating drought in California? 1976 to 1977, exactly 40 years ago. If you look, and it wasn't just California either, and that's where, if I was to label one thing as the holy grail of psychoanalysis, of market trading and everything, it would be the principle of synergy. It's not when just one or two things come into play. And even when we were just talking about gold and silver bottoming and it finally turning up, it's when several things are coming together that you see a sustained move. And I think the same thing with regard to what I'm expecting as far as a food crisis. And there are a lot of potential things out there. Just as, just in January, and it was actually the third or fourth event of similar nature, in Argentina, they were talking about plagues of locusts that suddenly were overwhelming the farmers. And lo and behold, I hadn't been following that as closely. When I started researching that a little bit, it was like, okay, wait a minute. Southern Russia had a similar locust plague last August. And a couple months after that, the United Nations was already issuing communiques and warnings about locust plagues in Africa. And so it's like, okay, here's one thing that's barely being talked about, but again, it's the synergy. So there's one issue. You've got even something as basic as the whole disappearance of the honeybees that keeps plaguing farmers and what's happening. Nobody knows, and yet that's another factor there. Each one on its own is not enough to really create the type of thing we're talking about. Then you've got the drought, and as you point out, and as I, in some articles and interviews I did over the last 2 or 3 years, I kind of just documented all the different crops coming out of California that are either California is the number one supplier in the U.S. or in some cases the number one in the world. I think it was tomatoes for canning is one of them, that California is the number one supplier. But another breadbasket is Brazil, and they've been suffering from a 4-year drought, and lo and behold, 2015 they said was the worst drought in 80 years. Well, there's that 40-year cycle again, right on cue. And so it's not just California. And they're talking about parts of Europe, parts of China. And so it's, again, this synergy. It's coming to a head, but it hasn't hit the tipping point yet. From a cyclic basis, where I've documented shows that the years basically between the 6-year and the 9-year of these decades, every 40 years, is when you have seen the biggest food crises and the biggest moves in price. If you just look at the late 70s and you look at many crops, soybeans, cotton, they double and triple in price. Coffee, I think it was multiplied 6 times in price. Cocoa quintupled during that period of time in the second half of the decade. And that was, as I say, the late 1970s. Well, I'll go back 40 years before that. What do you have? You had the Dust Bowl. Just a devastating crop crisis throughout the Midwest, which is really what's responsible for driving so many farmers to California.
Good point.
When they just had to walk away from their farms and ended up out west, and 40 years later, well, they're getting hit in California in the late 70s.
So how long do these droughts go on for before we kind of go back into some normal weather patterns?
Sometimes it's just 1 or 2 years, but 1 or 2 years without a major crop or with a severely curtailed harvest of that crop creates some serious problems.
Especially as the world increases in population. Obviously, the U.S., when you look at California, years ago, the Colorado River wasn't, as depended on by Phoenix and Utah and all these other states and Las Vegas, which have ballooned in their population compared to 40 years ago. And same thing with California. The population is so much bigger. So obviously, the situation is different with an exponentially increasing population.
And it's not just that. And here again, we come back to this principle of synergy. You've got the population issue. You've got crops being diverted to energy, like ethanol from corn. Crops diverted basically to livestock feed. And so when you put all those things together, and the kind of the just-in-time type of inventory structure that at least our country has become accustomed to. I think they call it the Walmart model, where, there's not backup and stockpile of a lot of things anywhere across the country. It only takes one serious glitch to create a domino effect of problems. And many of those droughts really only do last a year or two, although several on this 40-year series that I've detailed go back to the 1850s. That triggered the Civil War drought in America, and there were several droughts around the world at the same time. But the Civil War drought lasted over a decade and just devastated. Funny enough, it created all kinds of dust storms, just like the Dust Bowl did 80 years later, across Kansas, across the plains in the Midwest, And at the same time, you had a food crisis in China that claimed 20 to 30 million lives, coinciding with the Taiping Rebellion. So it was kind of both natural and man-made food crises. And many of them do have a man-made element to them as well, whether it's what I was just talking about with diverting crops to non-food uses, whether it be economic and financial type of situations. There's a man-made factor. The Soviet famine in the 1930s that coincided with our Dust Bowl was another man-made crop shortage, food shortage that took tens of millions of lives. And there were other droughts going back. Look at the 1810s. You know, all these things we're talking about are more, you think of hot drought. Well, the 1810s started out with droughts and famine in China, Europe, even America. But then 1816 through 1819 was a global famine that was triggered by the eruption of Mount Tambora in Indonesia and the ensuing year without a summer in 1816, where across Europe and the U.S., there were freezing temperatures every month of the year during 1816. And so the growing season was almost, it wasn't non-existent, but it was so shortened that, so even that that event and the ensuing crop stresses lasted a year or two, but the overall impact hung around for at least 3 to 4 years. And so, you know, as you see, and the thing is, I try to discuss these things without being alarmist. You know, I'm not trying to be a Chicken Little, the sky is falling type of thing, but I'm trying to identify that this is a recurring pattern. And there's also very fundamental, for lack of a better reason, lack of a better term, reasons for things like this. There's a very consistent 40-year cycle in the sun, and they call it the Great Conveyor Belt, and it governs the intensity and the ebb and flow and the spikes higher and spikes lower of solar storms and sunspot activity. And so there's, you know, the sun is really the key to everything we're talking about here. So the fact that they've identified a 40-year cycle in the sun just corroborates all of this analysis. And so it's not just some isolated or an anomalous thing that's going on here. Every 40 years we have seen this, even though it takes a little bit different shape and a little bit different form each time.
Eric, so in closing here, can we get your thoughts on what you are suggesting people do to prepare for this, to be prudent regarding a potential food crisis, and, you know, kind of going back to what we talked about in the beginning of the interview, precious metals, you know, your summarized thoughts on what people should be looking for and doing with precious metals?
Well, I think that, you know, a lot of it would be trying to exercise common sense, and I think it's always from a purely personal standpoint, as opposed to the markets. It's always wise to have a little bit of stockpile, for lack of a better term. And again, I'm not advocating the head for the hills, go off the grid, the sky is falling mentality. I'm going to be watching for early signs of it. And usually these things don't just come out of nowhere. If you're watching, if you're listening and paying attention, you can see where they're happening, you can see what they're impacting. In many of these cases, it may just be one significant crop, and a lot of the focus goes to a different crop that still is plentiful enough. Of course, as the population expands and the exporting continues to grow, that's a bigger pile of buyers all heading for the same crop, whatever that may be. So I think that you need to monitor it on an ongoing basis. There's not at this point a lot of little specifics where something like that is concerned that I can say, buy this or that and hold on to this and that. I'm going to be monitoring that every week, every month, and hopefully recognizing where those signs are emerging as they do emerge. Where the markets are concerned, I'm watching very closely certain signals in different markets. Already a market like coffee has shown me signs of a major bottoming developing. Now, obviously, if there were a shortage in coffee, that's not quite as critical as other crops, but it would certainly have its impact, especially in America. And so it could just be a thing of preparing to have to pay more for a lot of these crops, these food items, for a few-year period. It doesn't mean that they're necessarily completely out of existence or out of supply, but that the supply would be curtailed enough that it's going to have a significant price move. And that's what I do and what I'm publishing is looking to be prepared and be positioned for those types of moves. And again, I think it's going to be a slow, steady process, one thing at a time. And then when probably 2017 is when you see the accelerated rising tide lifting several boats at the same time going on. So 2016 is when I'm looking for a lot of the precursor and the early warning signs to start to unfold.
Well, Eric, it's happening, and it's happening quickly. Today was an excellent day to be able to talk with you. Obviously, being able to see what the Fed did, their lack of decision, what's going on with precious metals. Obviously, lots of things are going on around the world. Global droughts, problems with food, economic problems. People need to be prudent. So you were able to come on the show. You're an incredible thought leader. So I thank you for doing that. Everyone, that's Eric Hadik of Inside Track Trading and also 40-Year Cycle. Eric, thank you again for coming on the show with me.
Thanks for having me, Kenneth. It was my pleasure.